Hey, it's Joshua here with another edition of Mortgage Clarity. And today I want to talk about credit scores. I actually have worked with a lot of clients over the 19 plus years that I've been in the business. And one thing I find is a lot of potential borrowers have kept themselves out of the market because they thought they had to have great credit in order to qualify for a home. And I can certainly understand why they would think this, because if you listen to all the misinformation and news, they would certainly tell you that the reason why more people don't own homes or lenders are too restrictive on credit. That's just not the case. Throughout all the different ups and downs and cycles that I've seen in the industry, FHA has always allowed like a 580 credit score, and that's not a stellar credit score by any means. And so, if you have been keeping yourself out of the game because you think you have to have perfect credit, talk to a lender. Find out first off, what can you do with the credit you have today. If you're still in a position with the credit you have to be able to afford a home that works for you, I think that's something you need to be looking into. And if you're not quite there, you can at least work with a good reputable lender that's going to help you come up with a plan to maybe get that credit score up. Now, why do I say I would not necessarily wait for the best credit score before I buy? Because it is true that if you're looking at a credit score of 580 or 620 or 650 or whatever, as you go higher on the score, you will see some improvements in their interest rate that you would get for your loan because you're considered a lower risk than a lower score borrower. However, a big mistake that a lot of people make is they keep themselves out of the game, either A, because they think they have to, or B, they think it's smarter to wait until they have a better credit score so they can go into a better program or maybe a lower rate. But they're forgetting what's happening to the value of that home while you're trying to work on your credit. If it takes you a year to get the score where you want, what happened to that? Well, if that house went up on average, say 5% per year, it's $400,000. That's $25,000 more you're paying for that. You're not going to pay that much more on that rate if you took it with the score you've got. So you got to take that into account as well. So my suggestion would be, if your credit score works and can get you in a home today, and the payment works for you, I would buy the home now and then continue to work on that credit report. And a year from now, if you've done a great job and you've gotten your score up and the rates happen to have gotten better and it makes sense at that time, then refinance and you've locked in the pricing today. You've earned the equity that home grew over that year, which will more than offset the cost of doing a refinance a year from now. So I hope you found this helpful. Again, big takeaway, don't just assume you have to have great credit and don't let that keep you out of the game to home ownership because the benefits are real. So if you like this video, hit the thumbs up. Until next time, have a great day.